Hello guys, this is Ozi TV on Facebook and Ozi TV Entertainment on YouTube. We are on TikTok and we are on Instagram. Today, our teachings is going to be on tips for financial advice. Tips for financial advice. Tips for financial advice. So, when you want to take an advice concerning how to manage your finances, first thing you have to do is you have to make budget. You have to make budget. You have to budget how you spend your money. How you spend your money. You have to budget and know your actual income. Then when you know your actual income, the money that comes into your hands, into your account, into your pocket throughout the month. So you now make a budget. Budget is, you now divide them. You separate, this one is for school fees. This one is for feeding. I'm not going to exceed this amount for feeding. This one is for clothing. This one is for car repairs or car maintenance. This one is for bills, electricity bill, water, and so on. This one is for emergency. That is, you can decide to set aside an emergency fund. That is contingency fund. That is fund that you keep in case of emergency. In case you are no longer working in that place you are working today, or in case there is an urgent retirement or unprepared, unforeseen circumstances, in case of sickness, in case the person need to pay hospital bill, in case the person need to repair damaged car. Maybe we are not praying for that, but in case such thing arise and you don't have spare money, you don't have extra money you kept somewhere for the repairs or to offset the bills. So that is why you need to do budgeting. Budget on everything. Budget your finances. When you make a budget, you try not to exceed that budget. And in your budgeting, you have to make at least keep 10% outside the whole money you have already separated. You have already shared them. This one's for food. This one is for school fees. This one is for bills. This one is for utility. This one is for clothing. This one is for children. This one is for upkeep. No. After that, you try and save at least 10% of your total income. You save it. Try and make sure you save at least 10% of your total income every month. It's necessary. It will help you in future. It will help you later on. Don't finish everything that comes into your hand. And as you are working also, you try to save. Try to save. Start saving money for retirement in case they retire you unprepared. In case you are asked to leave the work unprepared, that is suddenly before the time you are supposed to retire. Make sure you have something you set aside that will help you. So, say tips for financial advice is budgeting. They say start an emergency fund. That emergency fund is money you have to set aside um for unprepared expenditures, unprepared expenses that could come without you knowing, expenses that will come that you are not prepared for. You save something to tackle it so that you won't be put to shame. Then you also have to save for your retirement. Have to save for your retirement. In case today you are no more working, you need to fall back on something. You need to have something that you can fall back on. So, okay, while I was working, I saved this amount of money. I saved this amount of uh, money in my account or in my fixed deposit or in my current account or savings or wherever. Or maybe use the money to buy investment, either to buy shares, buy properties, buy land, buy houses, buy things that you can sell them and get more money to invest or to start business or to start doing something for yourself. So for for a child or a man or a woman or a person to be able to have all the knowledge concerning how to manage your finances, you need to also do while you are in case for those living abroad, there they pay you pay tax, comprehend taxes. You need to pay tax on parking, pay tax on car park, pay tax on houses, pay tax on properties, pay tax on this, pay tax on that. Those that are living in civilized countries, you know what I mean. You pay bills, everything, you pay for it. So, unlike those that are living in third world countries. So, yeah. So, as a as a as a worker or as a staff or as an employer or an employee, you need to save 10% of your total earn, total income. You need to save it for the rainy day. You never can tell when something, some maybe surprising or emergency will occur. You definitely have something to fall back on. Then you need to also do something they call, you need to take care of yourself in case you are working and or you are doing business. Maybe you are not working, you are not a salary earner. While you are doing that business, you have to pay yourself every month. You bring out money, pay yourself salary. So from that your salary you are paying yourself, you can take care of yourself there. You still set aside from that salary, you set aside some certain amount that you'll be spending on yourself and the ones you'll be saving also. And you leave the capital, because as a businessman or as a businesswoman, while you are saving your money or while you are trading, it's not good to dip hand inside the capital to spend or to do expenses. No, it's good for you to pay yourself salary at the end of the month. Then from there, from the salary you paid yourself, you can now take money from there to give whosoever you want to give, to do your expenses, to run around your own personal businesses, and to do something for yourselves and your family. Not that you immediately any little problem or any little you quickly run to your capital and dip hand inside and remove huge amount of money without replacing it immediately. It will affect the business. So as a businessman or woman, pay yourself salary so that every month you know that you are paying yourself. As you are paying yourself, you will definitely not touch the capital. The capital still remains. The capital is still there. The capital is still the main money, bringing the bigger money. It's not something you touch. It's not something you go there and dip hand and take any amount you want because it's your money, it's your company. No. If you run your business like that, it will liquidate, it will run down. But when you set aside at the end of the month, this is the family upkeep. This is from your salary, you can give to your family, you can give to whoever you want to give. But at least make sure at the end of the month, you set aside something for yourself, then for the family. Pay yourself salary. Don't touch the capital. From the profit you made last month or the previous month, from there, pay yourself salary. And as you do that, you'll find out that you not find things. You will easily be accountable to what you are doing, to the business you are doing. You will easily know when you are losing and when you are making profit as a businessman. Then as a salary earner, you can equally remove 10%. Already you know how much you are earning. Remove 10%, you save that one. Then you remove the ones for bills, you pay them. Then you now remove the one for for the taxes and so on, in case you need to pay tax, in case you need to pay anything that you need to pay, you remove them. Then but make sure, under no circumstance, some will say the money is not enough. How much is the salary? That salary that is not even enough. That is that's something. There's no need to save. That when it's not even enough for the whole family, then where will they now get the one to save? You can equally save. You can easily save. You can, if you want to drop, at least no matter how little, drop something that you know that you'll be saving this amount of money every blessed month. You'll be keeping it for unexpected and for emergency. So thank you for listening to Ozi TV today. God bless you. Bye.